The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we're all the way into January 12th already. And in a new year, starting to see a little bit of a trend start to develop. And I thought it would be kind of a 2 steps back, 1 step forward kind of market. And so far, it certainly looks like that. My guess is that if we're going to have a serious pullback, it won't be the all in 3-day ones where we lose 250 points in the S&P. It's going to be these kind of the 2 steps forward, 1 step back. Actually, 2 steps back, 1 step forward. You're going to have these little bounces, then they're going to be sold. Of course, this is options expiration week, so I'm expecting them to try to hold the market up. And we're going to look at some of the stocks that are actually moving on. You'd think a day like today, you'd actually see a little bit more movement than we've had. Off 15 points on the S&P cash, 2029 on the S&P cash, 2.06 billion shares as we start the show. So not a lot of volume, but we are probably in this area where it's going to be, I think we've got the big target set, which is highs in probably around 2062 on the S&P cash, or whatever it was, 2064. Take about 2070 to bust out if you can get that kind of volume. It looks to me like it's going to be hard, though. We've got a dollar index that is hanging up here fairly well today and the last weeks. It's up against the upper boundaries up here. Let's see what we've got right now. And it's playing around at this 92 level, but I don't really see any big impotence to have a big pullback. This may be a congestion zone that it works at. Maybe we'll see some evidence of a pullback. I just don't see it yet. And, we've got probably a little bit more indication that gold is going going up is also a good indication that the market can go sideways. One of Tom O'Brien's first big guess about gold in around 2000 was a man named James Sinclair. He was a big trader in the 80s in gold. And I've never asked Andy about him. Maybe Andy has some stuff to say about him. But it is, anyway, James Sinclair basically had one thing that was very interesting in the interview, and that was that he said that gold really likes to run in sideways markets. And, maybe this week is just that sideways market, and we're seeing gold take its move in a market that, even though we're down, it's not like we're down 50 or 100 points or something. Options continue to tell us that we've got a market that's probably got a downward bias, but it's not that big. My guess is that they're going to try to hold this thing up through Friday's expiration, and we're going to get into some of the reasons why. But I have a feeling it's earnings next week. We had some huge disappointments this morning. One of those is SanDisk. We'll get into that today, but I'd been kind of warning about SanDisk and MU for a variety of reasons. No more bigger ones than Samsung has built its own factory to make more memory of what is a commodity business. Also, Intel's foray into 3D transistors that can pack more into smaller spaces, and most people think that, well, SanDisk and MU, Micron, are the biggest memory manufacturers. Au contraire. Guess who's the biggest memory manufacturer in the world and has been forever? That is Intel themselves. They make a lot of stuff, and that stuff has memory, and they make the memory themselves in it. And right now, they are making a lot of that 3D memory available that they manufacture, cutting into both the prices of SSDs for all, and probably putting a little bit of pressure in the market for those products. But at the same time, margins basically dropped about 5%, or at least that's the pre-warning from SanDisk. And there is nothing that will move a stock faster than a slight miss on margins. A slight miss on revenues, and stock pulls back a couple of bucks, and maybe they pick it up next quarter. You start losing margin, and sales have to go up 10, 20% to make up, the 5% drop in margin. And that's why you're seeing SanDisk out here being decimated, and also MU. Let's take a look and see what we have here. MU's off 6%, and SanDisk, which was off 10% earlier, is off 14%. I was going to say decimated, but most people use decimated very incorrectly. And most people don't know the history or lineage of decimated, but it is 1/10. It comes from the Roman soldiers. If they would take off a running in a war, i.e. they backed down from an opposing army, they would, the kings, not the kings, the lieutenants and captains of the Roman forces would take every 10th man, put them in the center, and instruct the rest of the people, the rest of the army, to kill them. So you had to kill your brothers in arms if you ran away, and it was one way of making sure that you didn't run away in a battle. But 1 out of every 10 is decimated. That's where that comes from. This is more than decimated at 14%. But I've been warning about this. And I think one of the phone calls we had right before I left for vacation on the 19th, I'll have to go back and look, on the Tom O'Brien show, someone called in, I think about SanDisk, may have been MU, and I said, watch out, Samsung has got their factory up and building what everybody else in MU and SanDisk are building. That's going to be one thing, plus a lot of the new technology I've been covering in the Tech Insider from Intel about 3D memory chips. And the idea is that these things don't take up a lot of space vertically. And for the same reason we have high rises in downtown, 3D memory can be packed in a much shorter and much tighter space, reducing the cost for power for these things, but also being able to put a whole lot more in the same space. And that's very important for these SSD drives and memory of all kind, actually, especially anything that's portable or has to go into small spaces like laptop memory, that kind of stuff. So anyway, we'll take a look at the chart in that a little bit later. Let's get into a little bit of history out here.
And it's all just a little bit of history repeating.
Yes, and in history on this day in 1914, Henry Ford announces that he will share the Ford Motor profits with its workers by raising wages from $2.34 for a 9-hour day to $5 for an 8-hour day. He hopes his own workers will be able to afford to buy their own Fords. Within 2 years, Ford goes on to produce its millionth car and really fire up manufacturing. Of course, this story is a little bit jaded because it misses the point where he was willing to basically double their wages and drop an hour off each day to keep the unions out. At that point, a lot of people look at the good that unions do, and that is true. What Henry Ford was very aware of was the rise of communism. And a lot of Russians had made it over here, and they believed in the whole Trotskyite crapola. And he was more than worried about a national uprising on the lines of what happened in the Bolshevik Revolution. What's that, 1918, just 4 years after this. I think this was a good indication of spin. All he cared about was keeping the workers or the unions out. And in 1941 was the last major auto union finally made a deal with Ford, pretty much pushed by the president at the time, who is a little soft in the head, I always thought, because he really bought into a lot of the populism and Western socialist democracy that's caused so much problems for years to come. But on this day in 1914, everybody got a big boost in pay. And it seemed to work fairly well for Mr. Ford. Of course, he had his own reasons. He had his own issues and demons. In fact, he had a lot of demons when you actually look into him. But of course, him and Joseph Kennedy were basically two birds of a feather. And they had their own little anti-Semitic thing going on where they were more than happy for what Adolf Hitler was doing in Germany to the Jews. And I don't know if this rose out of the whole unionistic thing around this early part of the year. It may have been something that truly competed or actually added to it. But he kind of really went nuts late in his life about anti-Semitism. But I digress. The big thing that we need to be looking forward to is earnings. Again, we've got a little bit of earnings this week. I don't think enough to really move the market. Probably going to get bad news, I think, out of Alcoa tonight. And that is, of course, the general recession and the drop in prices of all commodities. But my guess is that the slow sales of the Ford F-150, a lot was built into the forward outlook in Alcoa for that. It's a fine truck, but at $3,000 more, it takes you 10 years to pay it back on the gasoline prices now. It went from 6 to 8 to 10 years in, 2 months? So the huge move in gasoline certainly made a problem. After the bell, I'm suspecting that probably a little bit is already in that. I didn't look at the chart. So let's take a look here. I hadn't looked at it lately. Let's take a quick look and see what it looks like. You know, this thing kind of came down on all the commodities. It's done its 50% retrace. I don't think this is a short candidate, but my guess is that if it treads water at this price, it's probably fairly decent outcome for those that are long. I'm not thinking this thing has a great deal to do with anything else. If I can move some of this stuff around. Okay. And what else do we have? Oh, let's get back to my PowerPoint. How does that get back up there? There we go. Of course, on Tuesday, tomorrow, before the bell, KBH Homes. And after seeing what we saw today in another high-end sector that we're going to be hitting, would be very interesting. KB Homes, my understanding, pretty high-end homes. And if we transpose what we learned about another high-end company, interesting. Also, after the bell tomorrow, CSX, we're going to go through more of these companies reporting in the next few weeks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, on Thursday, we've got Citigroup in the morning, Fastenal and Lennar. Fastenal, well, probably a lot of people don't pay attention to it, but I do, especially industrial. They sell nuts and bolts, and most of the time they say they sell nuts and bolts for delivery tomorrow. What they have to say, or when their business is fast and slow, is a good heads up for what's coming in general industry. In the coming weeks. It's kind of a canary in the coal mine. So I look at it. It doesn't move the markets so much as I think as a good indication of what's happening in the industrial sector. Of course, Lennar, mid-priced homes, I would say, or lower-priced homes. And we're going to get a good read on that on Thursday morning. Of course, two home builders this week. After the bell, of course, this is the one that can move the market. And, of course, it's going to come out after the bell on Thursday, which means it's going to hit for expiration on Friday. Yeah. So the 16th is expiration, of course, since Friday. The first Friday was the 2nd. So that makes the 16th expiration day. And then we go, of course, into a long expiration in February. First Friday isn't till the 6th. So you actually get to the 20th of February for expiration. So we're going to have a nice, 34 days out here for the next expiration cycle. And kind of why in most of my positions in the daily newsletter or the other ones, I went out a little bit with this early expiration in January here. Of course, on Friday morning, we have Goldman Sachs. I don't know if there's going to be a lot of surprises in that one. Now, next Monday, we're going to be looking at Delta Airlines. I was pretty sure right before we left for vacation that the airlines had pretty much topped, and I said so in my daily newsletter. We'll take a look at a couple of those charts here, but I think probably about all the good news that they can get is in there. Before the bell on Tuesday, ATI, Halliburton, J&J, Morgan Stanley. After the bell on Tuesday, Cree, IBM, and Netflix. Now, Netflix had some good news last night, won some awards for one of their shows about, what do they call it, LBT. I don't even know the abbreviation anymore. But anyway, he had one of their shows about an alternate lifestyle. Maybe I should just say it that way. And apparently everybody critically, they liked it. I haven't watched it, but I don't watch a lot of their original programming unless it's stand-up comedians. But some of their stuff is kind of neat. I watched the first season of House of Cards and then kind of got bored with it. I think it's pretty good. I just didn't see where it was going to go. And a little far-fetched that nobody knew what the president, vice president was doing. Those guys, there's always somebody, and you couldn't stand in a place in Washington, D.C., in a train station and not someone notice who you were if you're the biggest guy in the House of Representatives. That town, if you've ever been in it, is wild. So I had to suspend my disbelief a lot to even go through the first thing, but excellently and well done. And it won some awards, but it was down. We'll look at it also. Anyway, on Wednesday, of course, on the 21st, we got Cypress Semiconductor, Travel Zoo, United Airlines, or United Continental now, excuse me, United Health. After the bell, eBay, SanDisk, which, of course, already pre-announced today, and United Rentals and Xilinx. So we're going to get into those semis later in the month. Now, the big Mac Daddy, of course, is Apple on the 26th. I suspect that Apple probably is right in here with and very close to its highs over the next year. They've got a few things going on, but my guess is this upgrade cycle pretty much hit this quarter. You're going to have some of it in the next quarter, but probably going to see this thing over the next year trade between these highs of 120 and probably 92. If it breaks 92, then you've got about 72 on it. But I could see this thing trading in that 92 to 120 range. But I think on the high end, maybe they come out with a few more sales. But even today out here, 108.92. This thing, at least options says that it should expire at 105 on Friday, which is what I'm looking for. Anyway, it is a mad market. And we're going to take a look at them. Anyway, we start off the day with SanDisk, or talking about it. When I look at the charts, what I look at is this big gap that needed to be filled with 12 million shares on April 17th of last year now. Nice big gap, 12 million shares. We got 17 million already. We're into that candle. This thing could get down to 75 and fill that gap without any problem, I think. Probably going to be some back and fill of people trying to buy this thing at the bottom. Anyway, we'll be back in just a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. Anyway, we're talking about SanDisk. This thing's got this big gap out here. You had a pretty good day, 12 million shares. We've already got 17 million shares, so look for in that 17 range. Had some articles out over the weekend, and some of these stocks bucking the trend were Best Buy. A pleasant article, and I think it was in Barron's this weekend, a few upgrades, but not a whole lot of movement, but one of the few stocks out here breaking the trend. And of course, they're going to have earnings at the end of the month, and that'll tell us a great deal. BMY, nice spike up on this one today in the biotech sector. They had some fairly decent results in a cancer drug in stage what do they call it? Not stage 3, but in round 3 of their tests. And nice kind of blow off top out here. You'd be really want to be watching this if you're long, if this thing closes back below this $62 level where it broke out from. So you're going to have to be very careful this thing doesn't pull back into the trading range. Nice gap at about $55 if it does. And it may just be nothing more than general market conditions. Another one out here with an upgrade and some nice articles is Diamond Resorts International. A nice pop. This thing is breaking above its November 11th, 27.29 or breaking out. Not huge volume, but of course a down day. Another stock out here moving rather wildly is Exact Sciences. And this one kind of looks to me like it's blown off its high out here. It was trying to get through the December 10th high at 29.97. Didn't quite get there this time, but pretty much opened up and headed straight down after about the first 30 minutes. Interesting enough, Lulu out with some very good words and forward guidance pop back up. The only problem is this thing doesn't have much left to go before it's going to have everybody and its dog that got taken out to the woodshed last year. If they're still in it, they are now looking at all the people that bought at the highs. That gap down was on the 12th of December with 25 million shares, and this is where the tough sledding goes. But as a fan of yoga pants on the right, and dieting woman, it not a bad thing out here. So I'm all for them, although unfortunately I think we need to get the fashion police out after some people. We all know what we're talking about. It's just as bad as the guys out here in Speedos out here on Clearwater Beach. And I've always had the corollary, the French corollary, and that is the bigger the gut on the guy, the smaller the Speedo if he was French. And all you have to do is come here in March and February to see what I'm talking about. NPSP Pharmaceuticals, another little pop out here. I'm trying to remember the reason on this one. I had most of these. I remembered this one announced it will be acquired by Shire for $46 a share, so instantly went to 46 bucks. We can forget about this one in the near future. Rice was downgraded to sell, which is about as low as whale poop. That we continue to look at this thing, and let's go back a little bit farther out here, see if there's anything out here. This is one of those energy. Well, let's go ahead and get the profile for it. One of the things I disliked about all these energy stocks, we talked about these ETFs going on over the last couple of years where they were supposed to pay back royalties. And I thought it was a good sign that there was some big highs coming in energy over the next 6 months. But I didn't like them at all. Anyway, this one is a Marcellus shale and natural gas, and probably just about anything else no one wants right at the moment to be involved in, at least on the stock price. Yeah, this hadn't been around that long, but already blowing out its IPO lows. SAP had some good news and a nice little pop out here today on a down day. In fact, when we were going to break here, we were looking at the lows of the days. Let me see what we've got out here. 2024 on the S&P cash, just 2 points over the low of day at 2022. So we'll see whether this can stick or not. Again, there is a bias to the downside. It is options expiration. 80% of expiration are positive from the Wednesday before. So that would say that 80% chance this thing closes above 2050. That isn't 100% chance, though. And just like a day with 80% chance of rain, we could not get rain. And there is a definitive long-term bias in options to the downside. And so you have to always look at both of those things. But that's what makes me think that we're going to see a lot more warnings like we saw in SanDisk coming into the future. Although all the our market makers right now probably want to do is make sure they can hold the market up through Friday. So I'm not going to spend a lot of time worrying about what's happening. And of course, I'm actually short a couple of stocks that are holding up fairly well. I think they're going to do a SanDisk, though. I think that there's going to be an announcement or news that's going to really push these stocks. THC. I think maybe these guys need to change their name with the legalization of marijuana in a lot of places, if you know what I mean. But down on heavy volume for Mr. THC out here. And they pre-announced, of course, also down on at the very bottom of their forward 2015 consensus. And of course, no one likes any kind of warning at all. This thing's going through its previous gap, and this gap had been basically had decent volume, 3.4 million shares back in June of 2014 on the 16th of June. This thing popped up with 3.4 million shares, got back into it back on November 17th. With $46.01 back into it today and bounced a little bit, but you got 3.7 million shares already today, which tells you you're going to take a run at that gap. There's also yet another gap underneath that. Let's go back a little bit farther. That gap goes down to the gap up with 5.4 million, actually 5.5 million shares on the 25th of April of 2014. That's probably where support on this will now exist. If the market pulls back, that's at about $43, and the next place you'd want to look at this thing. Okay. What else do we have out here? Tiffany and Company. We were talking about how some of the high-end market had been very weak. Tiffany had a new ad campaign. I don't think it had anything to do with the results yet, but they are at least a little controversial for alternative lifestyles, as they like to say today. But down on monstrous volume, which can't be good for the high end of the market. And the chant has always been, the high end will always be there. The high end will always be there. Well, this made a fairly decent sign with a double top. The second one on November 25th on lighter volume, it went sideways. And this is kind of the pattern out here. You're getting a nice pop to the high side, volume's just a little bit less. You go sideways for 1 or 2 weeks, and the bottom just falls out of these stocks at the highs. But this is kind of the move that I'd been looking for a while, and it's probably going to take 6 months, I think, before we go through and see all the ripple effects of the strong dollar. And even though energy is only 12% of the S&P, it correlates to 30% of the moves. It's hard for me to believe that we see energy companies lower for the next 6 months until they bottom out or go sideways, and then see something like the markets adapt. Maybe we can rally from there, but that correlation is one of the best correlations in the market. Just 12% of the S&P, but acts like 30% of the S&P, and that should tell you a great deal. Another one out here on the downside is TripAdvisors. And trying to remember that bad article on, not the article was bad, but an article that was not pleasing to longs, and Trip was out. It's off a little bit today. Not a lot of volume out here, but you want to be watching this one for that 67.14 low from November 14th before you'd even have an opportunity to buy this thing. But off $111 off its last major high from June 30th. Probably everything that you need to know. As always, you can give me a call at 877-927-6648. You can send an email to me at path@tfnn.com and or post a message in the den if you want. And see what else we have. Oh, let's look at a few of the other stocks that are in my scans these days. We have plenty of time, I think. Oh, you got plenty of time out here. Wanted to look at some of these stocks, especially with Apple moving, on whether or not we had some highs showing up. And so far, I think Avago is probably telling us a lot. They are a major supplier to Apple. Last high was out here was December 5th at the height of the short squeeze after the downside. We saw $105 with 2.9 million shares on that December 5th high. We got into it on Friday with 2.3 million shares, so lighter volume, pulling back into the trading range. And of course, you don't want to probably look at Avago without looking at Apple. And Apple's down fairly strong. And this thing, to me, looks like it's trying to make some energy up. About 103 is the level this thing would have to break to get a lot of people out of it. But making a nice polytrend at top, as Bob Carver would call it. Used to like Bob Carver before he went full aluminum foil helmet on us. And now he's a little questionable out there. Used to like his website, but it's all conspiracy theories now. He kind of went off the deep end, but had some very interesting stuff. He had that, I always kind of described it as a contact lens over the top, a nice dome out there. And he calls it a polytrend top, which was probably a better description of it. But you have a bunch of little smaller trends, but they all end up making kind of a dome out there instead of higher highs. And of course, nice move out here. We'll see whether or not anybody will sell Apple at the end of the day. Again, I'm looking at 105 as where options are telling me Apple is going to move. Going into earnings, the 26th, probably not a good sign that they're not running Apple, but getting out of it. CPB, which is Campbell Soup, also probably telling us a great deal. There is before a market turns down, there's always the idea that you can get into stocks that are quote, quote, safe. And by safe, they mean probably the most resistance to a downturn in the market. There are things like Clorox and Campbell Soup and other things that people are going to buy regardless. And that just means that the stock will go probably down less than semiconductors like SanDisk. Well, pretty good indication that even Campbell Soup up here is having issues with volume and people pushing it higher. The November 28th high, $45.71, got tested on Friday with $45.73. So 2 cents above it. It closed below it. We've got it moving down. And does it mean short these stocks? I think they're much better fish in the sea, but it tells you that even the safety stocks are having somewhat of a problem out there. And let's take a quick look at CLX since I haven't had a chance to do that. This thing's kind of making its own little highs up here. Let's take a little closer look. And no sign on Clorox yet. But my guess is we're going to also see Clorox probably do the same thing as the soup company. And is there just nothing better than chicken noodle soup for lunch on a cold day with maybe a peanut butter and jelly? Those are the fondest days of my youth. To look out and see the snow. I normally it was tomato soup and a peanut butter and jelly sandwich on white bread, but I kind of graduated out of the tomato soup thing. Kind of a little thick sometimes, but either one's fine. But what else can you say? Crocs, pretty hated shoe out there. Of course, my favorite video on YouTube is the Crocs and the Turtle, if you want to Google it. But CROX, the October 28th low at $11.33, 4 million shares. Got it pierced by 2.4 million shares on Friday. So one of the stocks out here not doing that bad. I mean, volume was good on Friday, but not enough to break that, really break through this low of October 28th. It's done on lower volume so far today, kind of a light volume out here. But a market that goes down will take these stocks also. Not a bad looking chart out here. If this market was really getting ready to rip, this may be an interesting stock out here. At least some of these stocks that have just been hugely whomped upon, not making some bad patterns out here. One that looks like maybe it's topped out is Callaway Golf. This thing had a huge gap down on the 25th of, what is that, July? Yeah, 25th of July. With 4.3 million shares. Tried to get into it with 3.5 million shares on October 27th and million on Friday. Looks like it's back at its highs. We've got a few more to look at. We'll be back in a bit.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I can see Tom O'Brien warming up in the bullpen for his show coming up in just 10 minutes. In the meantime, we're going to wrap up here. Andy Heck is away and not near his computer. He asked me to tell all our faithful TFNN listeners he has 3 new articles on Seeking Alpha. If you enjoy his rather broad brush articles that he's been writing about things like natural gas, crude oil, bottoms, and gold, the low interest and fear trade. So he's got some new ones on that. That's pretty much it. Anyway, he had a question in the den about what options say, and basically on the SPYs. And we'll see what they show today. They do tend to track into Friday and follow the trend. But they're saying about 204 for Friday's expiration. My guess, though, is that I always put a bias on the results depending on the short interest in the market. And we had a lot of people in this last little move not reshort the market, at least from the intelligence I have. And that's where these markets become incredibly dangerous. I think that they will hold this market up to some extent, but I could see us closing out at 202, 203, and as low as 200 for the SPY. So I'm not expecting huge movement before the end of the week. I'm thinking we're going to start seeing that with these companies that did not pre-announce coming in at the low end of the range, mostly for dollar exchange rate issues and some other things. But a lot of these things, just like SanDisk, had been companies that throw me back to Ed Young, one of our commentators here at TFNN, who always said the best cure for a high price is a high price in commodities. Well, memory prices, there's probably nothing more in electronics that's more a commodity, and memory has been that. And with Samsung ramping up production on theirs and a general decline in the industry, and of course, everybody trying to make as much as they could to get into Apple's ecosystem during the launch of the iPhone 6. But we got pretty much everybody, I think the well's a lot shallower than a lot of people think on Apple's products. And I think that SanDisk news out here also tell us that because they're a big supplier to memory for Apple, also tells us that maybe Apple is starting to kind of cut down on the orders going into next quarter, and that most of the people that wanted an iPhone have bought an iPhone or were waiting for the contract to roll over have bought one. But you should, when you look at the options, you shouldn't look at them on these indexes without a good idea or a little jaundiced view of the conditions and how many people are short. One of the reasons that options tend to run during expiration week is a great deal of people thinking that that it's going to break before the Friday before expiration, and they try to pile on. And for the most part, option market makers are more than willing to just support the price throughout the week and then let it fall the week after, and they'll make sure that options going out longer are very, very expensive compared to the options of this week. So if you're thinking about putting a put on a index or a equity, and you see a huge change between the difference between this week's and next, other than time, normally good indication that they're planning on holding the market up as best as they can. Anyway, Tom O'Brien's coming up directly after this show on most of TFNN. In the meantime, so when you can, not when you have to, see you tomorrow. Same bat channel, same bat time.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.